I have been a rich man and I have been a poor man. I choose rich every fucking time. When I have to face my problems, I show up in the back of a limo wearing a $2,000 suit and a $40,000 gold fucking watch. You listen to me and you listen to what.
Welcome back to another video, guys. Today we're going to be checking two reversal patterns that can improve your trading nature. So these are two common patterns that a lot of people know, but they actually can't use properly or don't know how to actually find them. So without any further wasting time, guys, let's get into the video. And don't forget to like, comment, subscribe, because the grind is not for us. So it's giddy. Sheesh. Here we are, guys. So like I said, we're going to be checking two reversal patterns that can actually improve your trading nature. So these two patterns are found in two patterns or after two patterns. It can be an uptrend or a downtrend. It can be a bullish trend or a bearish trend. So basically what happens is that after an uptrend or a bullish trend, there has to be a breakout and a retest and a further movement to the downside where the trend started, right? So what it means is that these two patterns is a head and shoulder and an inverse head and shoulder. So on a bullish trend, once we break a bullish trend, we actually form a head and shoulder. A head and shoulder forms as a reversal pattern to show that the direction of the trend is changing. For instance, if we are on an uptrend, then we're breaking, right? It means that now we're actually looking for selling opportunities. So in a bearish trend, after a breakout, we get to have what? Bullish momentum, right? So that bullish momentum form an inverse head and shoulder because we have been on the downside, going to the upside, and we have broken. So that breakout is a neckline, right? So don't get confused, guys. It's too early. So I'm gonna show you guys how these patterns actually work and where to actually recognize them. And it doesn't depend on the index or currency that you're trading. It works in any form. As long as it's the market nature, you will always see reversals. Where there's reversals, it has to be an inverse head and shoulder. If we are from the downside going to the upside, then a head and shoulder is from the downside going. If we're from the upside going to the downside. So if you have some questions that you feel like you don't have anyone to ask, you can just text me. My WhatsApp number is on the intro. Feel free to text me, even though I don't have your numbers. Just simply tell me your name. I'm gonna add your number, then we're gonna chop it up. Without any further wasting time, let's get straight to the video. So as you can see, this is the movement that happens when we're going up. Whenever any pair or any index is bullish, we move in this form. The markets don't move momentarily upwards, but they make certain retracements even though they're going to the direction. I hope you understand what I mean. What it basically means that the market has its own nature of moving and it's zigzag, right? So that zigzag is making higher highs and higher lows. So those are the things that I will teach you on other videos. But this is the movement that we actually use whenever the market is bullish. So this is another scenario. This part is another scenario. This is the bearish trend or bearish movement. So this is the way that we use while going down. Like I said, the market is not sharp as a pen. It doesn't actually just say we're dropping or we're selling like that. No, we actually move in retracement. We don't actually go down directly, but we actually have to correct ourselves while going down. See, so that's why the market is so short, because most of the people, they don't really get to realize where to sell and where to buy. Because remember, all this direction, it's a downtrend, right? You're looking for selling opportunities, but in a specific price there, you can't sell. Like there's a price that you can't sell at. This retracement, you can't sell at that retracement. So you actually have to know your lower lows and lower highs. You know what I'm saying? So yeah. So guys, so the difference becomes when the two trends are in presence. So how do you see that an inverse or a head and shoulder is information? As you know, you'll be on an uptrend. As soon as price break, as I was saying, as soon as price break, let me move this right there. As soon as price break the uptrend, it has to retest. This retest forms as a head and shoulder, neck. Because as you can see, these are two shoulders, remember? So it serves as a shoulder actually. It serves as a shoulder because this becomes the head and this becomes the shoulder. Because remember, this price was a high. It was supposed to be actually tested to go further up, but it intended to actually break and retest inside, in which it forms what? A head and shoulder. So in the same direction, the inverted head and shoulder, we only have it when we break the downtrend and go into where the trend started. Head and shoulder, we have it while we're from an uptrend going to the downside after a breakout. These are some of the things that your mentors won't share with you guys and just leave you guys to struggle. So as you can see, if we were on a downtrend, then we break that downtrend, we then form an inverse head and shoulder before going to where the trend started. Remember the trend started here, right? And this is where we broke out the trend and this is our retest. So this is the same scenario as this. If you enter as a retest of a breakout, you actually wait until the price reach where the trend started. So guys, as you know, we are in 2023, so we're gonna be using the data from 13th of May 2023. Now we are on September. Then we're gonna be checking from 17 May 2023 till the present right now. As you can see guys, we are on our highest point right there. We get to witness that we form a head and shoulder right there because we were from an uptrend. Now we have a downtrend. Like I said guys, a head and shoulder, you only find it when we are from an uptrend forming a downtrend. See, so another pattern that's more important is a double top and a double bottom. I'll teach you guys this double top and double bottom, but it's simple guys. Thing here, we had an inverted head and shoulder. As you can see, we were from a downtrend. Now we actually form an uptrend. See, same thing here. We actually in a consolidation form. Then after we have an uptrend. So this becomes what? An inverse head and shoulder. Same thing here, we had an uptrend, then head and shoulder, which shows that we're gonna have a downtrend after. Same thing there, we had a double top right there. Remember, all these things are on H1. So imagine seeing a head and shoulder or inverse on H1, then you directly know that we're gonna form an uptrend or a downtrend. So you just execute a trade after higher highs or high lows. Simple. But the thing is, it requires a lot of patience. A lot of people and I blow a lot of accounts through being impatient. We had a downtrend, then we encountered to have inverse head and shoulder. After, then we have an uptrend. And this was a smooth uptrend. Then we go to the highest point right there. After making an uptrend, then we get to have a head and shoulder right there. Then we have a downtrend. See? So I want you guys to go do these things, and whoever sees this video, just go do this on your chart and send me. As long as if you're trading, I hope this also improve your trading journey, because it's an important factor. If you're using trends, if you're using support and resistance, there's no way that you don't see a head and shoulder inverse. So they can be more applicable on your strategy or your trading nature. Same thing as there, we had uptrend, then after that we have a head and shoulder, then to the downside. Uptrend, then we have a head and shoulder, then start selling to the downside. There we go to the current price now, guys. This is the current price of German 30. German 30 is an index. Remember, it's part of your 900, your USA 30, your XP 500. So it's an index. A lot of people, South Africans actually love this index. Don't know why. But then yeah, and actually close the account. But this is a downtrend. Then we get to have inverted and shoulder. Then we are actually looking forward for an uptrend after. So this is the current movement of German 30, guys. I'm gonna wrap it out right here. If you find this video any productive, like and comment W's in the chat and subscribe, guys. Like I said, the grind is not gonna stop. Today Saturday I'm chilling. Sunday, Monday we are online. Tuesday we are online. Wednesday we are online. Thursday we are online. Friday we are online. If I miss a day, I'll make it up, guys, with the video. So just stay tuned. Go in 30 days straight. 30 days straight without no stop. Gonna be uploading. Be outside. Gang.
You mailed in my company a postcard a few weeks back requesting information on penny stocks that had huge upside potential with very little downside risk. Does that ring a bell? Okay, great. Well, reason for the call today, John, is something just came across my desk, John. It is perhaps the best thing I've seen in the last 6 months. If you have 60 seconds, I'd like to share the idea with you. You got a minute?